Ordinary South Africans seem to have escaped the full onslaught of tax reform, with the rich being targeted in this year's national budget. But this might be short-lived, as the government will need to find other ways of increasing revenue. The Treasury needs a further $2 billion for next year's fiscal period. Growth is making a slow recovery, which means revenue will come under pressure at least until 2019. Sumitra Nydoo reports.
Personal income tax is the biggest revenue generator for South Africa. In this year's national budget, Finance Minister Pravin Gordhan provided some relief to lower income earners and introduced a wealth tax of 45% for those earning over $120,000. A bold but risky move.
We're talking about 100,000 taxpayers that's in this band. And not only are they able to potentially take their money offshore, they also themselves are able to go offshore. These are a relatively mobile, highly skilled, highly educated group of people.
The Finance Ministry appointed a commission to look into tax reform in South Africa. The commission proposed no changes to VAT, but it could become a reality in time. Value-added tax affects most goods and services. Any increase here could easily fill the revenue shortfall. New taxes linked to health and the environment are already on the cards.
Right now, fuel is VAT exempt. In the next year, they're going to discuss making it VAT payable, which actually has the potential to raise a lot more revenue for the fiscals.
Any increase here will negatively impact the poor. VAT is already at 14%. Some economists say that these measures will curb spending and slow growth, a massive concern for job creation. But government is hoping its efforts to grow the small business sector and encourage entrepreneurship will lift employment. SMMEs will receive $300 million from this year's budget.
Small business has to be supported in policy making, in regulation, and indeed in funding, and therefore and also in finding opportunities.
The budget has been well received by most. Many believe the minister did what he could to find the balance, although some economists felt like it was a regressive budget and not in favor of foreign investment. The heightened political tensions around the president and the finance minister himself are adding to concerns around economic growth.
It's a very difficult environment. Difficult for a person like a minister himself while sitting, putting together your budget, and there is this noise about your continued role is not helpful. So our politicians, like they call on us to be responsible, they need to just understand that their comments and the noise does not help.
It was a simple but smart budget in a difficult economic environment. If anything, some analysts believe it was a prudent budget that will keep the ratings agencies from possibly downgrading South Africa. Sumitra Nydoo, CGTN, Cape Town, South Africa.